PCE just clocked in at 4.1%, the highest inflation reading since 2023. You would think markets would tank, they didn't. The S&P 500 barely moved. Chip stocks slid for the fifth day in a row on OpenAI IPO delay fears. But here is the interesting part. Small caps actually closed green. Rotation is real. Let's get into it. Welcome to the Daily Wrap. Today is Friday, June 26, 2026. This is your end-of-week U.S. market recap from Due Diligence Desk. Quick reminder, everything here is for education and entertainment, not financial advice. I'm not a licensed advisor. Do your own research or talk to a licensed professional before making any investment decisions. All right, let's look at the numbers. Today was a pretty quiet close despite all the noise out there. The S&P 500 fell just 5 basis points, basically flat, closing at 7,354. The Nasdaq was down 0.25% at 25,297. The Dow dropped less than 0.1% to 51,876. But here's what stood out to me. The Russell 2000, the small cap index, was the only one to close green, up 0.07% at 3,010. On the week, though, it was a different story. The Nasdaq got hit the hardest, down 4.6% for the week. The S&P fell 2%, but the Dow actually managed a positive week of 0.6%. That's the rotation story playing out right in the numbers. VIX is at 18.41, down on the day. Markets are not in panic mode even after the inflation print. So what drove today? It all comes back to one headline. The New York Times reported that OpenAI is now leaning toward delaying its IPO to 2027. The reason? SpaceX had a rocky post-IPO debut and the AI trade has gotten volatile. The story said Altman was given a choice, go public earlier at lower valuation or wait for the full $1 trillion price tag. He apparently chose to wait. Why does this matter for stocks? Because OpenAI is one of the biggest justifications for the entire AI infrastructure build-out. If OpenAI delays, that raises questions about how fast data center spending needs to come online, and that hits the chips. NVDA fell 1.6%, Broadcom dropped 3.7%, and Micron gave back almost 7% of its huge Thursday gain. Meanwhile, South Korea's market, which is heavily weighted toward chips, closed down 5.8%. But, and this is the important part, the rest of the market was fine. More stocks went up than down. Small caps closed green. This looks more like rotation than panic. The other big piece of news from yesterday, which continued to weigh on sentiment today, was the PCE report. PCE came in at 4.1% year over year for May. That's the highest reading since April 2023. Core PCE, which strips out food and energy and is what the Fed actually watches most closely, was 3.4%, the highest since October 2023. Now, this is not great. The Fed has a 2% target and we're more than double that. Chair Warsh has been making hawkish noises. The Fed removed a planned rate cut from its forecast at the June meeting and left the door open for a hike later this year. But here is what the market seems to be saying. A lot of this inflation was driven by energy prices that have already come down. Oil is back near pre-war levels. The June PCE print, which we won't see for another month, may tell a very different story. Consumer spending also beat expectations, up 0.7%, which actually suggests the economy is healthy even if prices are high. So it's a complicated picture. Not great, not a disaster. Let me give you a quick portfolio corner update. This is our $1,000 challenge. We're in the build phase and we have pick one live. Pick one is NVDA. We entered at $200.04. Price at market close Friday is $192.53. The $100 position is currently at an unrealized loss of $3.70 or 3.7%. Now, NVDA was down again today, 1.6%, as part of the broader chip sell-off. It's been a rough week for semiconductors, but nothing about today's news changes the thesis on NVIDIA. The AI infrastructure build-out is still happening, memory is still in shortage, data center demand is still strong. Quick reminder, everything here is for education and entertainment, not financial advice. This is my own real money experiment. I'm not a licensed advisor, so don't buy or sell anything just because I did. Do your own research or talk to a licensed professional. Before we wrap up, here is what's on the calendar for next week. And heads up, it's a shortened trading week. Markets are closed Friday for Independence Day, so Thursday is going to be a very busy day. Monday kicks off with consumer confidence data. The University of Michigan sentiment reading recovered to 49.5 this week. The conference board number will tell us if that's a real trend or a one-off. Wednesday is loaded. We get ISM manufacturing PMI, which has been in contraction, plus ADP private payrolls as a preview of the main event. And Fed Chair Warsh is speaking at the ECB's annual forum in Sintra, Portugal. Any hint of more hawkishness on rates will move markets. Then Thursday is the big one. Non-farm payrolls for June may absolutely demolish expectations. 172,000 jobs against a forecast of just 85,000. If June comes in strong again, expect rate hike expectations to tick back up. If it softens, that could give markets some relief on the Fed front. This is actually one of the most important weeks we've had in a while, a lot riding up those job numbers. All right, that's your daily wrap for Friday, June 26th. What a week. 5 straight down sessions for the Nasdaq, a 4.1% PCE print, an OpenAI IPO delay, and yet the broader market is still holding together. If you found this useful, hit like. It genuinely helps this channel reach more people who are trying to invest smarter. Subscribe so you don't miss next week's coverage, and we've got a packed week ahead with the jobs report. Quick reminder, if you want a simpler path, just buy the S&P 500 or Nasdaq 100 ETF and let it run. If you do it monthly, your investment will be growing without you having to think too much. But if you enjoy the research side of it like I do, the stock picking, the analysis, that's what the $1,000 portfolio challenge is all about. Just remember, it's a small portion of your total assets. Don't lose sleep over it. Whether my portfolio gains or loses, it is a learning point for people that follow it. That's the whole point. Have a good day and have a good weekend.